Hi, welcome to the Market Alert for Wednesday, the 10th of February 2016. And yesterday's session, we saw the market rallying strongly in the pre-market session, up over 150 points, only to come back 200 points. And then we saw the market being ramped at the open, only also to come back, to go back again. And then during the quiet time to come back again also. No signals in this part because the range of these bars are just outside of the 8 to 25 range. And as I've said before, if you want to widen the range in the indicator settings to actually take advantage of these wider ranges, that's fine. Just make sure that you keep the risk down as shown in the market alert, where you can actually work out how much pound per point or bet per point that you would need to actually bet using the trade management calculator. In the evening session, we saw the market driving higher. Well, there's a surprise, as I've said on numerous occasions in the market alert. So the plunge protection team come in and drive this market higher in the afternoon session, generally 3 p.m. It's now known between a few trading friends as the afternoon ramp. And you can see their price is being ramped to the upside there. You know it's going to go far when you get the big bar to start with. The only problem is, of course, that you can see there the market goes through the 20-point scalp, then comes back below the entry price before then moving back towards the upside as well. So the question is, what do you do in this situation? The answer to that's fairly simple. As the market came back towards the psychological level, you may want to take the profits off the table just in case the weakness returns in the market and prices continue lower. That said, as I've just mentioned, there is a pattern which you will have noticed that the market at the moment is being forced to the upside, and you can see once the market had got used to the idea or removed all of the weak longs, as it's known, the prices were able to move back to the upside there as well. So a difficult one to play because psychologically the market coming back below the psychological price and then the entry price can actually create panic in a lot of people that are actually long. And that's the objective here is as I said earlier, to get rid of the weak longs. So prices are marked back down and then they're driven back to the upside as well, in the direction that they intended in the first place. In the daily chart, you've got weakness still prevailing, but don't be fooled by this because today, yes, you've guessed it, Mrs. Yellen will be testifying at 3 p.m. You don't want to be in the market for this one. And I tend to agree with Zero Hedge on this one actually. If we just bring up this item here, what Janet Yellen could say tomorrow, that's today now, to unleash a market surge. She's going to do whatever she can to actually get this market to go north, not south. So be warned, 3 p.m. the market will be subjected to a speech by Mrs. Yellen, and as you've seen with all central bankers, they're doing their damnedest to keep this Ponzi scheme and illusion alive. So be warned, 3 p.m. be out of the market unless you're on the buy side beforehand, and then again just be careful in case she does say something that they move or use to mark the market down, shake out the weak longs before moving the market higher. So generally it's a good idea to stand aside when Yellen actually speaks, because of the volatility can be quite great. She is the number one central banker, as it were, and like I say, it's probably wise to stand aside there. Just coming back to the chart though, you can see that we've got the chart marked up there of all levels, just in case she comes out and says something dovish, and also anything that may be deemed and interpreted as hawkish as well. So they're the actual levels that are actually marked up on the chart there. Let's just get rid of the news. There we go. So now you've got a clearer picture of those areas of support and resistance to cover which direction the markets are likely to go. But I would expect it to go north because, like I say, they're going to do whatever they can to keep the thing alive. On the implied volatility is 22.96, just up slightly, just down slightly on yesterday, and then again you can see that in the chart. Now the backdrop to all of this, I'm just going to show you something else that's very important, and that is the Deutsche Bank. Now, Deutsche Bank have been making all sorts of protestations over the last couple of days, saying that the bank is fine. The CEO has been out saying everything is fine. They've even used Twitter to say that everything is fine at the Deutsche Bank. Well, I beg to differ, and as Francis Claude Coburn says, don't believe a word until it's officially denied. And also David Stockman here. I have a lot of respect for David. I don't trust Deutsche Bank. David Stockman unleashes truth bomb. When the crunch comes, bank CEOs lie. They certainly do. And so do central bankers as well. But that's another story. And so I'm with David on this one. In fact, I already was going to mention this. And fortunately, David has beat me to it and said something that's made it to Zero Hedge about CEOs telling porkies when it comes to the crunch. And if you have a look through here yesterday, the Zero Hedge is dominated by Deutsche Bank. You may not know this either, but Chase Bank and Barclays Bank ceased trading for 8 minutes during Monday's session as well. And I keep saying to people, you want to be careful about the high street banks, in particular Barclays Bank, because they were bailed out, and not many people are aware of this, in 1998 when they were invested 171 million into long-term capital, and the Federal Reserve actually had to bail everybody out to stop the thing from collapsing back then. Another one there, Deutsche Desperation, and there's plenty about Deutsche Bank in here as well. So again, if you want more information, then feel free to dig it up as well. So that's really it for this morning. There's not a lot else to report. The market's probably going to have a bit of a move this morning as the European markets open. Depends how firm Deutsche Bank is this morning. Will also be reflected in how the market moves today in the European markets. Yesterday we saw a 150-point move just after 7 a.m. But again, keep in mind the Yellen speaking. We've got crude oil inventories as well later on today. But it's certainly going to be an interesting one, and I might even just tune in to see what she has actually got to say, because it's going to be a comedy, that's for sure. Right, that's it from me. I will see you in tomorrow's edition, unless I speak to you in between via email. Other than that, have a great day. Also, thanks for your support, and also for watching. See you in the next one.